Hi everyone and welcome to the Dollars and Sense podcast. I'm your host Dinesh Dayani and we're recording from the Suntec City Convention Center for MooFest 2025. Our topic for today is probably a question that's on every investor's mind. Where are the investment opportunities in 2025? With shifting global trends, changing interest rate expectations, and new technologies such as AI emerging, it's becoming more important than ever to understand where to focus your investments. Joining me for this discussion is Isaac Lim, Chief Market Strategist at moomoo, who's here to share his expert insights on the sectors, themes, and strategies that could shape the investment landscape in the year ahead. Isaac, welcome to the show. Let's get started.
Thank you, Dinesh. Thank you for having me on the show.
Right, always good to help you. Always good. Okay, so what's your overall outlook for the global markets in 2025? Given that markets are trading near all-time highs, but also we're facing geopolitical uncertainties.
If I had to break it down, I think you're right to say that markets are pushing higher. Let's break it into different geographical regions, right? I think for the US, there is that sense, the sentiment that's coming up from the markets that everybody is starting to get a bit more tired with Donald Trump's tariff and trade rhetoric, right? So they're starting to focus inward a bit more, and that has led to the loss of the US accessionalism that we have seen for majority of the second half of 2023, the entire year of 2024. So I think first thing, while markets are trending higher, especially US markets, the loss of US accessionalism will probably see the upward trend instead of a strong push. It becomes a slow grind. For the rest of the world, especially with reference to like the UK, the Chinese market, Singapore markets, more local, close to home, we're definitely seeing a bit more capital being allocated to these other markets, right? So I would say investors should not completely ignore the US markets just because it's going to be a slow grind. At the same time, they should also focus on other markets where there are more opportunities. And of course, the big question, where do I think the markets will end up at the end of the year? According to statistics and data, seasonality data shows that, more often than not, S&P actually tends to finish the year stronger, in fact, much stronger than when it first started.
Okay, that's probably a good thing for all of us investors.
Yeah.
However, you mentioned, diversifying into Asia. What's your thoughts on like China or Japan market?
Those are very good diversifiers. Both the Chinese and the Japanese markets, they are relatively mature markets, very broad markets with a lot of names that I think you and I are familiar with.
Yeah.
So things like in Japanese markets, you have Toyota, Honda, right, Suzuki, those automobile, more industry. And then of course China, we have the Xiaomi, Hotmart, which has been rallying quite crazily.
Yeah.
These are names that are familiar with investors. And I think for investors to look into the Chinese and the Japanese markets, I think these are good options. One thing to note, however, is the Chinese markets right now is in a very deflationary environment because of the property market meltdown a couple of years back. And it has struggled to climb, right? So I think when investing into the Chinese markets, I think investors should really pay attention to what the Chinese government is doing, because as long as the Chinese government can come in with a meaningful, sizable amount of stimulus, I think the Chinese market, we're going to see it rally, we're going to see it continue to grow from there. It also helps that China now is not just focusing on production, but also focusing a bit more on consumerism. So that may boost their domestic markets a bit. As for the Japanese markets, very quickly, I think they are still trying to find a balance between rising inflation and increasing wages to meet the rising inflation.
Right.
So if you are a Japanese citizen, unfortunately, it's going to be a painful period. But if you are invested into the Japanese market as well, it's one of the more undervalued markets out there with stock names that are that have been around for quite some time. So I think those are interesting names to look at. But don't just be misled by the valuations. I think sometimes the dividend yield can be attractive. May not be as attractive as Singapore markets, but still attractive enough if you are considering a global diversification of your portfolio.
All right, I think well put. Now that we're talking about global markets, I'm just also wondering what are the key macroeconomic trends that are shaping the investment opportunities right now, right? Specifically, what are the key risk areas that investors should be kind of particularly mindful about?
I covered it at a very deep level in my second half 2025 outlook. I think broadly speaking, one of the things is that the world is getting more fragmented. There's geopolitical fragmentation. A lot of disconnect. We are seeing regional wars. We are also seeing central bank interest rate divergence, right? So From that perspective, investors should be a bit more watchful, not just about interest rates, but I think about the value of the currency. So I think for Singaporean investor, if you're based in Singapore, you invest using primarily the Sing dollar. I think you want to be very sensitive to how the USD is currently depreciating, right? My proposal, as I've highlighted in my outlook, would be, don't blindly just hold on to the dollar as cash, because you are essentially losing value from the dollar depreciation.
Yeah, exactly.
What you want to do is actually invest into short-term investment-grade corporate bonds, or you can invest into short-term US treasuries that gives you slightly higher than expected percentage yield. So even though the dollar may devalue, right, the interest rate that you're getting from these cash-generating products, right, will offset the devaluation of the dollar. So that's one part. I think another thing that I would encourage investors to do is to keep an open mind and reframe the way they construct their portfolio. I'm sure you and I were about the same age. We're not getting any younger. On one side, we have to carefully build our wealth to invest correctly.
Yeah.
On the other hand, it's also about income generation, right? For me personally, there will come a time when I'm too old to constantly track the markets. I just want to take it easy, hopefully with my grandchildren or my children. Take it easy and just have a kind of a consistent income cash flow every quarter, every half a year, every year. So investors should keep an open mind and look to build a dividend portfolio. And you look across the developed markets and compare to STI. STI actually surprisingly has one of the highest dividend yield, and that presents a lot of nice dividend yielding opportunities within our Singapore market. And I think that is really a very good place for Singaporean investors to start with their dividend portfolio.
Okay, I mean, it's interesting that you talk about dividend portfolio and income generating assets. So on one hand, we discussed, the markets, equity markets are all-time high. At the same time, we say we also need, income. So how can investors kind of construct their portfolio so they don't miss out on either situations?
Let me put it in this way. All investors should have a core portfolio, and then you have a satellite portfolio. The core portfolio would traditionally be made up of your more steady state returns, stable returns, low risk kind of long-term investments.
Okay.
And then your satellite portfolio is where you take on a bit more risk so that the markets ideally reward you with a bit higher returns, right? So you have the best of both worlds.
Yeah.
But in this day and age when traditional correlations are being challenged, I would propose on top of this too, right? You have because core portfolio, satellite portfolio, they focus a bit more on capital appreciation. So you build a dividend portfolio where it requires a bit of mental control in the sense that, your stocks may not appreciate in terms of stock price appreciation. So close to zero or no capital gains.
Okay.
Of course, if there is, it's the best. But if there's no capital gains, at least you are seeing some sort of dividend. Right. So you want dividend yield. I would advise your viewers to look at stocks that have a dividend yield of at least above 4.5%. That's the first factor, right? And I think the second factor is look for companies that not just consistently give dividend, but their dividends tend to grow as their profitability and free cash flow grows as well. So that is how I would advise to start building a dividend portfolio. Put a bit less emphasis on the capital appreciation and a bit more emphasis on generating higher dividend income.
Yeah, I like the way you put it, because your capital appreciation maybe should come from the other parts of your portfolio, right?
Exactly.
Yeah, either the core or the satellite ones. I mean, I just want to talk about the next more important thing, because you said traditional mindset and portfolio construction has to be deconstructed a little bit. But when we invest, technology dominates the conversation usually. Everyone talks about investing in the biggest, the brightest technology stocks, right? So are we still in the early stage of this trend? Because AI is right at the forefront of our minds. Or are we starting to see clear winners in the AI space, where we know who to go for already?
Hang on, let me ask my AI. No, I'm kidding. I think at the end of the day, Dinesh, tech is still going to be very integral in every part of our life.
Yeah.
You talk about the projected growth of a country, let's say Singapore, for example. We're facing an aging population. Now, in order for us to stay productive on one side, companies will have to find more ways to integrate and make use of technology, right, to keep up with the productivity. That's one side. With the aging population, there comes a lot of healthcare costs, a lot of healthcare concerns. And I think recently there was a conclusive study that showed that an AI built by a team of medical doctors could actually more accurately diagnose early stage terminal illness better than the doctors can.
Okay.
So clearly there's a lot of use cases for all this technology, all this AI, and I do really believe that there's further growth, right? So back to your statement about deconstructing and challenging traditional mindset. What I'm hearing is a lot of people are asking me, hey Isaac, all these AI and tech stocks, their valuations are getting more and more expensive. Doesn't it mean that there's a risk event on the horizon? I will not say no to any risk event because the markets will always do what the markets want to do. But my question back to them will be, what happens if the valuations of these tech stocks is the new normal? They climb and appreciate in value because there really is more future use cases for them. And finally, ideally, one fine day they settle at a higher level, and because that is how they should rightly be valued.
So, moomoo is one of the most popular brokerages in Singapore, obviously. So, are there any common mistakes you see retail investors making when they try to, like what we say, pick the hot stocks or pick the sectors to go into?
Yeah, and that is why, they say that I think about 80% or 88% of retail investors lose money. And then people will say that, trading is a zero-sum game, there's no way you will ever make money out of it. From a data perspective, I think we're seeing a lot of investors trading the same hot stock over and over again, week on week. I don't blame them because, when you see a stock growing by, say, maybe 12-20% overnight, naturally, it's hard to ignore, exactly. You want to get in on that piece of action, right? There's this saying that always guides me, right? The early bird gets the worm. The second mouse gets the cheese, right? So in the world of investing is like that. I used to be one of those that like to chase the gains, but the way I phrase it is, why don't I sacrifice that additional that 2 to 3% gain just to be sure that this rally is not a fake rally, is not a bubble, and then I get in on the action. There's no loss to being a bit more patient and waiting.
On the moomoo platform itself again, are you seeing any interesting investor behaviors? People maybe want to invest in AI stocks or sector rotation this year in particular.
Definitely, I think AI related is a very strong driver. Two sectors that we are seeing is first and foremost AI, very strong picks from our retail investors. The second one will be gold. Because, gold prices, we are up about 26% this year to date. And I think investors are also worried that, if the market really sells off, they want some sort of guarantee, a safe haven. So that's why they choose to buy gold. In a recently concluded investor sentiment survey that we moomoo have done together with our users, what is interesting is we are seeing also a very nice take-up rate of crypto investors. Yeah. Okay. And I think at this point in time, it's getting a bit hard to ignore crypto. Now, whether you believe in crypto, whether you believe in its use case or the blockchain technology that underlies it, I think the fact that, institutions are starting to take it up, and the fact that the US just launched its Genius Act, I think it's getting difficult to ignore digital currencies as an entire industry. So I think that's also another interesting sector that we're seeing.
And now we can invest in it through an ETF as well. So you don't have to pick individual.
Exactly. So I think the recent iBit Bitcoin ETF is actually the best performing ETF that BlackRock actually has, that they have on our platform. So
I think there's three very interesting asset classes, right? One is like the super traditional gold. One is like in equities, the AI the most common sector in the forefront of our minds. And then, don't ignore crypto.
And that's essentially diversification as well, right?
Yeah. I'm just wondering, just throw you a spanner as well. Do you think the same investor is getting into all three of these assets, or are they different investors getting into different assets?
I would put it another way. I'll share with you something surprising from our investor sentiment survey. So part of our investor sentiment survey actually showed that, across all risk profile of our clients, so low risk, medium risk, high risk, all of them are actually investing into all three asset classes.
Okay.
And all of them are investing more into crypto, which really baffles me when I first read it, because why would a low risk invest more into crypto? But again, this is where I think traditional understanding is being challenged. Even within the context of crypto, we have our stable coins, right? And then, of course, you have all the other smaller coins that are speculative, highly speculative, right? So maybe from the new age, low-risk investor point of view, stablecoin is considered low-risk as well. Yeah. So that could be the reason why we're also seeing low-risk investors invest a portion of their capital into crypto.
Actually, that's a very interesting insight. I wouldn't have guessed it if you didn't do that research.
It took me by surprise also when I read the sentiment report. It's a bit strange.
Yeah. Okay, so now I want to touch on another thing, right? There's so much information and data out there in the market space, some may even say information overload. But how can investors use tools like those on moomoo and brokerages like yours to identify the real opportunities instead of chasing trends, chasing hot stocks?
I think one very good way that investors can deal with this is, they use the tools that we have on moomoo not as a be-all and all, but as a complement to their own thinking and their own strategy, right? So why I say that is because, let's say, you start with a top-line idea, tariff, global supply chain, is going to be tested because of the new bout of tariff, right? Then we can use the tools on moomoo platform. Either you look at a thematic investing factor, you look at supply chain of a company, or you look at a supply chain theme, right? So companies that are part of the global supply chain. Then you can use AI to complement it and say, out of all these companies within the global supply chain, which one possibly, I'm just giving a very general example, which one possibly has the least exposure to any sudden changes in Donald Trump's tariff policies.
Okay.
Then once the AI narrows it down for you, it actually saves a lot of time. Right? Then you yourself will have to go and do your own due diligence to see whether this makes sense from an investing or trading point of view.
Okay. So you should use the tools as a shortcut rather than a be-all and all.
It's true.
That's
correct.
You need to have a mindset of what you want to invest in. Use the tools to help you narrow it down. And then obviously don't forget your due diligence. You have to do your own research sometimes if you invest in individual companies.
You're absolutely right, Dinesh. Absolutely right.
Okay, finally, just to sum it up, what's the one piece of advice you would give to someone planning their investment strategy for 2025?
Okay, so to sum it up, I think first point, we are seeing loss of US exceptionalism, but that does not mean ignore the US completely. There are very nice tech names and AI names that we've discussed at the forefront of the AI frontier. They are all listed in the US, right? So don't ignore the US completely. Second thing is you want to be a bit more diversified. So look to safe havens like gold and use the moomoo tools that we have to help pick out what are some of these low volatility stocks across the other geographical regions as well. And the third thing is traditional portfolio allocation is being challenged. So investors should have a core portfolio, satellite portfolio, and maybe one more dividend portfolio for that consistent income generation.
Okay, thanks Isaac. Very nicely put and very concisely put as well. Okay, so thanks for sharing your insights, Isaac. And thank you for tuning in to the Dollars and Cents podcast. If you are listening or watching this episode, we hope this discussion on finding opportunities in 2025 has been useful for you as an investor. If you like our content, don't forget to follow us by subscribing to us on the Dollars and Cents podcast, whether you're watching on YouTube, Spotify, or Facebook. Leave us your thoughts and comments in the comment section wherever you're watching from. Thank you.